Hi, I'm Philip Chew, your host for Trading World Summit, and I'm excited to introduce to you Alson Chew, our speaker for this session. Alson is a former senior proprietary trader at an established boutique firm where he traded a proprietary fund and achieved the firm's top trader award twice in a row. With his acute market analysis, Alson has achieved a total net profit of more than $3 million trading the financial markets. With over 10 years of live trading experience and research, Alson gained insider insights to the market's inner workings and eventually decoded the price deception by market makers and created his trademark price action manipulation strategy. Known as a skillful and sincere trading mentor, Alson has imparted his techniques to more than 1,800 students around the world today. Now, with this short intro, it's my honor to welcome our summit speaker for this session, Alson Chew. Hey, Alson, welcome to Trading World Summit.
Hi, Philip. Thanks for having me. It's my privilege to be here to share more about trading with your audience.
Fantastic. It's also my privilege to have you on board the summit to share with us your trading journey of how you started off as a proprietary trader and then subsequently left the firm to become an independent trader and mentor. Now, for the benefit of those summit participants who might not know you before this, can you walk us through on your personal trading journey? How did it all got started for you in the world of trading in the first place?
Okay, so I was one of Adam Khoo's student, right? You all know Adam, right? So I actually attended one of Adam's trading courses, and that was the first spark, right, that spoke my interest in trading. And since then, I researched more about trading, and it's something that I'm really passionate about. In fact, I actually studied this degree called Business IT in the university. But instead of joining a technology company, I decided to join a proprietary trading desk with no basic salary. So it was really a risk to take on for passion during that time. But I knew that it's an opportunity that it allows me to learn more experience, right, from experienced traders and to learn the tricks about the industry. So that was how I get started.
I see. And I suppose that is like more than 10 years ago?
Yes, that was more than 10 years ago.
Okay, so correct me if I'm wrong. So you actually started learning from Adam first before you become a proprietary trader. And then after you learn from Adam, you decide to join a proprietary trading firm and you become a proprietary trader from there. Is that right?
Okay, it's actually a trading course under Adam Khoo Learning Technologies Group that's not directly taught by Adam. Okay, but during that time, I was also very passionate about what Adam is teaching in terms of his investment knowledge. So I actually bought all his books, and some of the books also got his autograph. He's one of his fanatic fan who always follow him. Any books that he publish, I will buy. So that was how I started.
I see. And so when you joined that proprietary trading firm, do you consider yourself as a proficient trader already at that point in time? Or was it really a brand new journey for you and you are also still trying to figure out what kind of trader you are and what kind of strategy is actually ideal for you? What was it at that point in time?
But before I joined the trading desk, I have prior knowledge on technical analysis. So using momentum indicators, trend lines, channels, the chart patterns. But when I joined the trading firm, right, it was really a total shift of trading methodology. Like they were more focused on looking at how the big boys trade the markets, how do they deceive the retail public, doing things like bull trap, bear trap. So this is basically something very interesting that I learned, right, when I joined the trading desk. So that helps me to gain the same edge as professionals when I started my journey.
I see. Now, this is a typical question I always like to ask all traders. During that phase in time, were there any bad situations that you got into? Do you in any ways blow up your account, or what were some of the worst mistakes you made during this learning phase?
Okay, at the start, I still recall, right, the first few weeks of in the trading desk, we were told that to do trades every day. You must we call it click. Click means you buy sell. You must click at least 5 times. Whether got strategy, no strategy, you just click 5 times. And this exercise is to train to see if the person can manage risk. And we were told that each trade you can only risk a maximum of $200, for example. So maximum, let's say 5 trades you do, right, you all lose money, is 1K drawdown. And you'll be surprised that even though all traders is given the same rule to click the same number of round trips, you sit there and you click, right, you realize that some people just either they take profit too fast or they cut in beyond $200. And this is really a first lesson that I learned in the trading desk. Of course, and that lesson actually built a strong foundation. In fact, we were told that if you cut loss right consistently with discipline, you're actually better than a trader who fluctuate wildly in terms of your performance. So of course, in my journey along the way, I do have large drawdowns, right? As I was learning, sometimes I made all kinds of mistakes that a typical trader would make: over trading, overconfidence, over permitting the trade and chasing the trade, and so on. So I remember I have a loss of 30 over thousand a day before.
Wow, that's
$30
a
over
lot.
$1,000. Yeah, I still remember it was one of those non-farm payrolls days where I don't believe the market will go down, and I just keep averaging in. And the moment I cut, the thing turned back down, turned all the way back up. And it was a very good news. It was a very positive non-farm payroll data. So I was thinking, hey, good news, shouldn't the market go down? I must buy more. The more I buy, then until I no limit, I cut the whole thing 100% goes back.
And then it just turned sharply around.
Yes, it just actually, the moment everyone cut already, right, the market is manipulation, basically. Like the market just recover fully, right? So that's why the news is not always what drives market, right? News. That's why we will say that number one mistake traders make is to rely on news alone. So
I see. Yeah. So even with that $30,000 loss, was it still within the risk parameters given to you?
Yes, during a time I was a bit I was actually 1-2 years into the job, so I was given much higher limits. So actually it was slightly beyond the limit, but I managed to make it back like in the next few weeks. But that 1 month was like basically a very basically zero, like you lose and you make back. And it happens from time to time for traders as well, right? There were months where because we calculate performance based on a quarter. So you could have two losing months, and your last your last month is the one that make all the money. It could be 2 months that make the money and 1 month lose, or all 3 months make money. That would be a good month.
I see. But that would also depend on your trading horizon as well, right? If you are a very short-term trader, then you shouldn't be seeing such that much of fluctuation on a quarter-by-quarter basis, right?
Yes. So we are doing mainly short-term trading when I was in the trading desk, because it's a full-time job. You sit there and you trade with the market. So it is better to look at your performance from at least, even for short-term trading, for at least a quarter basis. Yeah.
I see. So there's going to be this one question that many traders will be very interested in. How were you able to end up being in a proprietary trading firm as a pretty newbie trader in the first place? Was there some tricks or some shortcuts that you are able to get yourself into a proprietary trading firm?
Oh, very good question. I actually asked that question when I joined the firm many years later on. I asked my mentor, like the senior trader, like, so many people apply and you all only choose 2%, right? So many 3 university, everybody apply, you only choose 2%. Why do you choose that? And he actually said that he saw something. I did something like additional certification in called CFA level 1. Okay, it's just something that I did when I was in university, and then they just wanted to give me a chance. But what really I think closed the deal is really just they just say it's feeling. Because trading is not so much of an IQ kind of thing. It's like you can have a very high GPA or low GPA, and it doesn't really guarantee. So they say that it's also the attitude. I think during that time my attitude not bad. I was very positive. I told them I like to play game. I like to play those numbers game, probability game, and I'm very passionate about trading. So I think because of that, the company gave me a chance.
I see.
It wasn't nothing to do with IQ or this.
I see. And how long were you with that proprietary trading firm?
I spent about 5 years.
Okay.
5 years before I left. Yeah. So around 5 years, I find that it's a good time. It's a good milestone for me to actually move on. I've learned the skills, and I think I paid my dues to the firm, and I made myself some money. And I wanted more freedom, right? By trading myself independently, right, and doing some of my other passions, right, like spending more time to trade, and also like when I do trade myself, 100% of the profits belongs to me during that time. So I thought that was like my own pay increment. Yeah.
I see. Okay, let's backtrack a little bit. During your 5 years with the prop trading firm, how long do you think you actually took before you know that you are generally a proficient and profitable trader already? Did it take you 1 year, 2 years to actually feel that you are actually there already?
Okay, good question. It will depends on the individual also. Okay, but I would say that for most of my quarter, in fact, I think almost all my quarters, I'm positive. When I became a professional, I really can't tell you a fixed timeline because it evolved. Even till today, I'm still evolving the skills, right, techniques. But I would say that I became more confident after 1 year. Like 1 year, I know that because in 1 year time, you probably have went through different cycles of the market, uptrend, mini downtrend, and during that time, I was trading through the European debt crisis, and market was very volatile. Every other day, the CNBC was announced in the afternoon during the European session was very chaotic. So I traded through this period, and actually I would say that it was during this time of chaotic situation where in the market where you actually grow as a trader, right? You grow more when there's a crisis than it's just a one-line bull market.
Especially during those situations, it's like it can be like totally new to you. So in a way, whenever market conditions change, you feel like you are just learning from scratch again how to actually react based on all the different things that's happening because you have not really seen this before, you have not experienced this before, right?
That's right. So it's good that traders, new traders always ask me how long do I need to become a professional? I always say that you need to go through uptrend, downtrend, and sideways market first. And sometimes market the whole year only uptrend, then you are actually only halfway there because you only experience uptrend. You have not traded a major crash or crisis or sideways market. Yeah,
exactly. When your sharp drawdown comes, that's when you test whether you are really a good trader or not, right?
right. In fact, I always say that a good trader may also lose money, but a good trader will make sure that the drawdown is minimal and have the psychology to trade himself back up.
I see. And you actually got Top Traders Award during your time with the prop trading firm. Can you share with us a little bit more about that award? What is it about, and how were you able to achieve that?
Okay, the award was given right for the top performing trader based on the net P&L after commissions. So during that time, I guess what I did differently was a lot of traders, right, because we base our income on a quarterly basis. So a lot of traders, when they make money on the first month, second month, what will they usually do? They will play safe on the third month because they want to protect the profits. Because if you suddenly lose back the first 2 months, you eat grass, right? So a lot of people will play safe. But during that time, I guess I was still very adventurous. I was like, oh, I have a good 2 months. I want to strive. Then the third month, I do a bigger size, right? Bigger size, and I like make about $200,000. Like really push myself, and the market was, I would say the trading god, the market god, right, was merciful, and I managed to get away with some of my more daring trades. Yeah.
Okay. So that's how you managed to you took on more risks and it paid off for you, and that's how you actually managed to get the rewards and make you the top trader of the company during that period in time, right?
Right. So I always tell even my students that, right, yes, sometimes, right, when you learn trading, it's okay to risk a fixed amount. It means if you decide $100, but once you get to a level, right, you want the breakthrough, you need to, at a certain point of time, right, to suddenly risk a lot, but it still must be manageable. That means if you make 20,000, you take out 5,000, 10,000, and you this 5,000, 10,000, which you make from the market, right? You use that to boost your performance. You see, so this will help you to so-called level up. That means from a basic level, you gain that psychology to size up. So these are times where you can do that. You don't do that when you have no buffer, and today you just want to increase your size when you have no buffer. You only do that when you have buffer.
I see. So in a way, what you're saying is that you are using the profits that is, in a way, your paper profits to take on more risk. So even if it doesn't work out, you're actually not eating into the original capital that you have, but you're just losing away the profits that you already, in a way, belongs to you from those.
That's right. That's right. Yeah. You
I
only do
see.
that if you have a good 1 or 2 months during that time. Yeah.
I see. And that is the part where, as a trader, it is really about building on your psychology to be able to actually think in that way and to be able to do things that way also, right?
Yes, correct. So we will, I guess also the good thing about being in the trading desk, not just trading alone or in the community, right, is that you have the right environment where everyone's psychology is very trader, we call it very trader psychology. Like it's okay to lose, right? In trading desk, it's okay to lose, right? A good trader may also have a down day, and this helps us in our psychology. Sometimes a good trader may decide that, oh, today this trade I'm very confident, I want to risk a bit more. There's nothing wrong with that, you see. But it could turn out to be a bad trade because no trade is 100%. But if it's a trade where he thinks that it's a high win rate, high probability, it's a trade that the trader must do, right? Even if his character is the one that will risk more.
I see. And I'm pretty sure that you were heavily mentored at that stage of your trading career, right? Can you share a little bit more about who was actually mentoring you, and what do you think were the things that you managed to get out of this mentorship the most?
Okay, I would say that right. In the trading desk, there wasn't any like a course where we attend, so it's very hands-on, and a lot of the learning is through the market, right? You were taught certain techniques, not exactly strategy. It means the boss will share his experience. My former boss was actually from the pit days, right? The open outcry pit days. So he has certain techniques where he look at the market, then he would bull trap, bear trap, take price action signals that you see. So it was not standard plug and play strategy that I now created for my students. But so it was really on the job where based on all these learnings and concepts, I developed my own style. Like I prefer to do this kind of patterns. I create this. So, and constantly refining it based on the risk reward parameters and so on. So it was really mainly on the job.
Okay. So in a way, when you were on the job, the main thing that your mentors or your boss tells you is that these are the basic principles, best practices you try to follow. But in terms of the specific strategy, where exactly to get in, to get out, and stuff like that, you actually do get the ability to actually make your own decision. Am I right to say that?
Yes, in fact, I would say that my former boss is actually a very profitable trader. But we always say that the techniques that he teach, right, when we copy exactly, right, we don't really make money. But when he do himself, he made a lot of money. You see,
what do you think is the main reason for that?
I guess it's the trader intuition sometimes. So some trader, they have like some senior traders, they have traded many years, like many years. They don't have specific strategy. They just use maybe instinct, a gut feel, right? That they cannot explain, like how to teach gut feel. Like they will just tell you, oh, I think I'm going to turn way. But what I will say that the consistent thing among all traders, even though they use gut feel or trading patterns, right, is that in terms of risk management, is the same. It's very strict. I've seen my senior traders cut loss. When it's time to cut, they have merciless. They are merciless. And this is one thing that I truly learned in the desk as well. When you're wrong, you cut first, then you ask question.
I see. So when you were there during that 5 years, at the start towards the end, what were your strategies or your methodology drastically different between that 5 years? Can you share a little bit more about the main strategy that you used at the point in time when you were still a proprietary trader?
Okay, the overarching so-called the style we use is short-term trading. So it's very different from my style now. Now I'm doing actually more swing trading because of my lifestyle. So when you're doing short-term trading, is very technical based, right? There's no don't need to look at the fundamentals aspect. And in fact we do things like a tick scalping, right? Scalping the level 2 ladders, do more some advanced techniques like commodity spreads, index spreads, right? But I would say that the one that actually gives me a breakthrough is doing more of directional trading. That means you trade based on certain price action signal, bull trade, bear trade, because these are fractal, consistent patterns in the market that never fails. And these are actually, when I did spreads, scalping, it gives me a very consistent return. What gives me a breakthrough is when I do more of directional trading using all these strategies that I still use today.
I see. And can you explain a little bit more, what do you mean by breakthrough? Breakthrough in what sense? Is it in terms of the profits, reward risk ratio, that kind of thing? Or is it like the time that you spend to manage your trading business? What's the kind of breakthrough we are talking about over here?
Okay, during the time when I was in the trading desk, scalping and spreads, right, can give you a very good income, basic income, but it's not very scalable. Okay, so the more scalable aspect of trading, right, is to go into directional. That's where you can, if you are right in your techniques, right, and you have the good, strong psychology, right, and you have an edge in what you do, you can actually size up. Like, for example, I always tell people that, even when I'm doing swing trading, it's just professional trading is a mindset. So even if I do swing trading, I'm still trading at a professional level, but now on a higher scale, higher time frame with a bigger size.
Bigger size, right? So in a way, what you're trying to say is that when you do really short-term trading like scalping and stuff like that, it's very difficult for you to go in with too big a size, right? Is that the case even if you are trading index futures and stuff like that, which is actually technically so huge, or in Forex as well? Is size a problem even for those kind of very big cap asset classes?
Okay, so you in terms of liquidity is still very high. You can go in and out easily. But during a time, right, the so-called the scalping technique, right, that we use, right, was getting more and more obsolete, I would say. So there were algos that catch scalpers.
Faster than you.
Yes, they will front run you. When you put a bid right there, suddenly you see order stack in front of you. I guess you as an experienced trader yourself, you understand this type of thing do happen in the market, right? Market makers will stack in front of you, right? And then so the algo during that time was more and more I would say smart, right? Smarter and smarter. That's why I say that scalping and spreads, right, is getting harder to do. So what really gives a trader breakthrough is, or consistent returns later on, right, and it's scalable, is really directional trading.
I see. I think part of the reason is probably also because probably your orders are being sold to those big funds, like what we have seen in some documentaries. So in a way, their algo will always be ahead of you. Whenever you place an order, they will just insert in before you, just because your intention reached them and their algorithm detect it and go ahead in front of you, right?
Correct. So the big boys, the market makers, they have servers, co-locations in exchange. So no matter how fast you are, you will never be faster than them.
I see. And that's the reason why going too short term as a human trader is only going to get more and more difficult in a way. And that's the reason why you actually move on to a higher time frame from there. So do you actually move into swing trading while you were with the proprietary trading firm, or you actually do that only after you left them?
I do some swing trading when I was in the trading firm, but still mainly during that time, I would say directional trading, but on a shorter time frame. So in short-term trading, right, like now short-term trading, I use 30 minutes. So 30 minutes, right, the algo do not, the age of the algo is dramatically reduced. If you use, let's say 5 minutes or less, then that's where you will get outgunned by them. So 30 minutes is still not so fast, not so slow. So I was using like 15 minutes and 30 minutes during the time, even for short-term trading. But I would say 80% more short-term and 20% doing some swing trades on the futures market. But now it's like opposite. Now it's like 80% swing and 20% short-term.
Okay. Because once you go into a higher time frame, your edge doesn't come from being fast, right? It comes from your ability to sense the market changing, and algorithms are still not as smart as that to have that instinct to see whether the things are changing and the sentiments are changing or not, right?
Correct. So on the high time frame, you basically will not be under the radar of the so-called the short-term algo. So and you have more edge in the sense, right? Lesser noise, you can see the price action structure more distinct. It gives you more edge also.
I see, I see. Okay, now let's move on to the phase of your trading journey. After spending 5 years with the prop trading firm, you decided to leave them. Okay, let's talk a little bit more about the motivation behind that. So you mentioned that you wanted to have a bit more free time to do the things that you want to do. And how does actually leaving a prop trading firm allows you to achieve that? And was it the change of strategy that you use, or was it really about having that choice to decide how you want to manage your trading business?
I guess that during that time, I have this consideration that if I were to stay, right, I could stay until 7 years, 8 years, 9 years, 10 years. So when there will always be a time when the question will come, when do I leave? So as either I leave on the 5 year mark or I leave on the 10-year mark. By then, I think I will, because I was scalping, right? And because the nature of the company is that there's office space and you cannot say that, oh, I want to do swing trading, I stay at home. So you are still bounded to do scalping. You have to go to office, you see, and you cannot say, I just want to do swing, right? Then you go office for what? So I guess during the time I wanted to switch over, right, to more of swing trading. Okay, in terms of the techniques is very much the same, right? It's all trained throughout the years, risk management, psychology, of course, adapting the strategy to more swing or higher
time frame,
short-term trading, right? So, and when during the time when I left, right, I actually reached out to Adam, right, to ask him if he's keen to actually run a trading course, and because I was very passionate about sharing knowledge about the markets, so and I was very honored to actually was given an opportunity with Adam, right? In fact, when I met Adam, Adam was very open to the idea of former institutional trader teaching the retail the institutional techniques.
Okay. So it was around that time when you left the prop trading firm that you actually joined Adam to become a trading coach and trading mentor in his company, right? Okay. Right. And that is also when you started becoming a fully independent trader, managing your own money. Do you at any point in time thought about managing money for people in one form or another through a fund or things like that?
Good question. So a lot of people ask me that, okay, you make quite good money in the trading desk. You definitely know what you're doing, right? So I give you some money. So during that time, I thought that I've been trading other people's money for 5 years. And I can tell you, it is when I trade my own money after I left, a few months, after I trade my own money, I actually more relaxed. It's like, oh, even if I lose, I was like, my own money, I can handle it. You see, but when you trade other people's money, I think for me, I have the pressure. Even when I was in trading desk, I remember when I lose money, I do feel very upset, even though it's not my money. I'm more upset than I lose my own money. I think the guilt of the responsibility when people handle you the money, and also the complexity of setting up a fund also. So when I left, actually, I have a younger brother, so I actually trade my own account, and I teach my brother to trade as well. So he actually trade for me, so I have a cut of his income. So he's like my prop trader. And since then he has been doing it. He's been doing it since 10 years already. So
your brother is also like a full-time independent trader.
He's a homegrown prop trader. I train him.
Wow. And I'm very sure that this is like the aspiration of many of the summit participants who's like joining this summit.
Right.
Most of them always have this thing at the back of their mind. If only I can become a profitable trader, I wish I can just quit my job and just focus on trading. Do you think that is actually realistic for most people? And what is the very important consideration to think about if you want to, let's say, just leave your job and become a full-time independent trader? There must be pros and cons to it, right? Can you share a little bit more about your personal experience with regards to that?
Okay, I would say that, right, to be a professional trader is a mindset. You don't have to really quit your job, because there are people who have a passion for what they are doing at the moment, be it an engineer, a banker, analyst, teacher, right, pilot. Imagine you study all the way to a pilot, to become a pilot. I believe you would have some passion as a pilot, right? In fact, when I started coaching, I have a lot of pilot students. I asked them, why do you, as a pilot, you should earn a good income. Why do you want to come to learn trading? But they tell me that they wanted to manage their own capital wisely and grow their portfolio, right? And I always tell them that if you find that you are very busy for full-time job, you can always do swing trading, right? Because swing trading, once you're proficient, you need less than 15 minutes once you're proficient a day to look at the charts to enter the orders, right? Of course, trading gives you a choice. If you're in a job that you're unhappy, then you have a choice to decide whether you want to quit, right? But if not, you can, if there's no like hard prerequisite that you must quit your job to do this full time.
I see. And besides that, doing it on a full-time basis, you need to have substantial capital base, right? Because otherwise, you are constantly worrying about whether your profits is enough to actually pay for the lifestyle that you have. And if your capital is not enough and your profit margin is not high enough, then it always put that stress on you and it will affect your psychology in a way, right? Is that generally what you experience as well?
Yeah, that's right. So you need to, I would say that there must be a transition point. That means if let's say you're in a full-time job, make sure that you consistently traded and your income has it match or at least 3/4 your previous full-time job before you transit over. So if your disposable income is very low and you go straight into trading, there will be the psychological burden, right? When you trade that, oh, I must win in this trade, and then you lose. Then the next round you say, I must really win, or then you lose. Then it will hurt your psychology in the long run. In fact, I would say that most good traders, when they trade, right, they put the risk there. To them, it's like a token. We treat it as a token, and then win or lose is okay because we focus on the long run. So your psychology will be well managed when you have this mindset.
I see. So after you become an independent trader, you also started mentoring at the same time. So when you became an independent trader after leaving the prop firm, was it very drastically different the way you trade? How do you actually, what was your strategy, your methodology, and your trading workflow like as you transit from a prop trader to becoming an independent trader?
Good question. So after I left, I still trade futures product. So in the desk, we trade mainly futures product, index, forex, commodities. So when I transit, I was still doing that at home. Then I slowly, take on some trade to retrain my psychology to take on more swing trade. So I would say that slowly switch over to swing over the years. And I find that during a time when I was switching over to swing, right, I realized that because on the forex and the futures product, there's only, I think, less than, if you ask me, less than 50 popular high volume futures or forex product. Okay, of course, we don't talk about those exotic pairs in forex. So you only have about less than 50. And if you compare this to the stock market, let's say US market got 6,000, 7,000 stocks. When you do swing trading, you tend to have more frequency and opportunity. And hence, that was the time when I start to switch over to stocks trading. So to me, it's like it's the same. It's still price action. It's just a different asset class, but the technique still works the same.
I see. So does things like news or fundamentals affect your decision in any way, regardless whether you are trading futures or stocks, for example, at a point in time?
Right. Even at the scalping level or swing trading level, right, I always tell my students that we don't look at data or news because we are fundamentally trader. In fact, as I mentioned earlier on, right, the number one mistake that traders make is to be totally focused on news, because sometimes news can be in sync with the price. Just like last year, COVID March crash, the news was negative, were very bearish, and the market crashed along with it. But when the market recovered, the news was still very bearish. So a lot of people, when the market recovered, they still wanted to short or sell. Then along the way, there's still some more selling. Then they thought that it's going to crash again. The news was very negative, right? Just last year, right? And then, but the market keep going up. But if you're a price action trader, you look at the technicals of the chart, you would have stayed long all the way.
Okay, because the chart is not telling you to get out, it's just telling you to hold on, and you know exactly when is the last barrier that you, right, if you breach, then you will need to get out, right? Is that generally how you look at it?
Yes, so I look at price level as probability. So when the market was at last year March bottom, right? To me, that was based on my strategy. I understand that a lot of traders who have sold at the bottom, and there were signs of big players buying in, big boys buying in. We call it accumulation, right? Accumulating the stocks. So I would say that during a time, it's not 100% that market will recover, but from a trading language point of view, right, we always say that this is a high probability event. And as professional trader, our psychology is that we don't take 100%, but if it's a high probability event, we need to at least, right, put in some size. In fact, I was also not sure that it's the bottom last year. But I told myself that because the news, the price action has shown me that it's the right thing to do to buy in first. And so I took the trade.
So you just enter a small enough position such that even if you're wrong and you cut, it's not going to affect your portfolio drastically. But at least you got in the first step. And if you continue to go higher, then you will look at adding on to it. Is that generally how you look at it?
Yes, that's right. And to even add in the initial size, right, I will actually ask myself this question, like, if you go up, will I be happy? Because a lot of people, they protect their downside. Okay, like they protect their downside. But they also must think about their upside, because if they enter, right, and then the thing really go up, then they only make very little, then they will regret not putting in more. So whenever I enter, right, the size consideration I'll tell myself is, okay, if I lose, I cut this amount. But if I win, I make this amount, will I be happy? So I will basically manage both sides. Then I enter the correct size.
I see. So it's about finding that point where if you are wrong, you don't kill yourself for it. And if you are right, at least you felt that it's worthwhile trade that you have taken.
Yes, that's right. I think you got it correct. Yeah.
I see. Is that something that is purely psychological? Is that a mathematical way of doing that? Or to you, it's always at that very point in time, you always have different levels on how you actually place it?
A good question, because most of the time, right, when I do my trades, they are with very strict risk to reward. At least 1:2, right? But during a time, at certain situation in the market, like crisis, we do have to break our rule. Because, for example, I share with you, like last year crisis, right? Market sell down. If you manage to catch the bottom and you still rely on the 1:2 rule, you will have missed the whole bull run.
Yeah, you've gotten out way early, right?
Yeah. If you just stick to, I only do 1:2, then you would, then 1:2, bye-bye already. Understand? Unless of course, you can trade the way up, but when there's crisis, you need to so-called break the rule a bit. And there's also times when traders have a breakthrough also. So I think I don't usually do that. Like I want to emphasize that I don't always break my rule. In fact, I'm very strict on my risk management. But in crisis like this, I will ask myself that, okay, if this is the bottom and if I'm right, I want to feel that I make the mid if I'm right. But if I'm wrong, I accept it.
Okay. But in that example, when we're talking about the crisis, then if you are looking to hold on to it as it goes higher and higher, that would mean that you're actually looking more towards a position trading or a longer term trading kind of time frame, right? Instead of just looking at swing trading. Because if it's just pure swing trading, once that initial swing is over, by right, based on your strategy, you should be getting out, right?
Right. So I do incorporate, like, for swing trade. Swing trading, some people may define it as a few months, a few weeks, a few months, or a half a year. Okay, so for me, trading, right, I never hold anything more than 1 year. For me, swing trading, and nothing more than 1 year. In fact, what I bought last year, I already get out and realized the profit. So along the way, what gives me confidence to write on a particular position, I would say I'll add in a bit of market's fundamental sense. Okay, that means maybe I will have a consideration. Take profit consideration will be, is this company fundamentally strong? So example, if I bought in Apple, Google, Amazon, Facebook, Alibaba, which I think is a household name that I don't have to tell you to do research. You know that they are strong and reliable company, not like the oil and gas, airlines, hotels, right? So when I enter into such stocks, right, I will usually write longer. I usually write longer because I know that, and especially sometimes, I join Adam's group. So Adam's actually give intrinsic value. So sometimes I draw the line at a bit shameless lah. So I just get I don't know how to calculate, so I get the number only. So I get the number, I draw in the chart, or on the top of the chart. Then if I see the technical setup, I enter already. Okay, then I tell myself, okay, I'm not going to take 1:2, right? Adam say intrinsic value is here.
It's way higher.
Yeah, so why not? I enter a good price already. Right. And my buffer is there, right? I might as well just write. And it's like take profit consideration is a trader discretion. Right? It's a trader discretion.
But risk management is very strict.
Yeah, risk management is very strict. Take profit is still a trader's discretion along the way. But standard, if you don't want to have any view, right, is like I told my student, you don't have any view, you don't think about all these things, right, then you just stick to 1:2.
Okay. So you mentioned that nowadays you focus more towards longer term, like swing trading to position trading. So from your opinion wise, what is the main thing between your swing trading strategy, the main difference between your swing trading strategy and position trading strategy, other than the time frame and the time period wise? What and any other main difference between these two?
Okay, to me, swing trading is just like position trading.
Mm.
Okay, to me these two lingos are the same lah. So because we're looking at a higher time frame, daily charts and above. So I sometimes I trade the 2 days chart. Also in my community, we trade the 2 days chart and the weekly chart. So there's a reason why we trade the 2 days chart, because we combine the bars is more distinct. Because daily chart got a lot of gaps. Yeah.
Okay. So let's be a little bit more focused in order to help the summit participants benefit more from the knowledge and the experiences that you have. So based on the current way that you trade right now, I just want to focus on the main strategy just for you to talk it through a little bit. Based on the portfolio that you have, what is the bulk of your portfolio, the main strategy that you're actually using to manage the bulk of your portfolio? Is it generally a longer term? Generally, how long do you actually hold this kind of position? Is it like for a few months to a half a year, 1 year, that kind of strategy? Can you elaborate a little bit more about that for your biggest portfolio part?
Okay, as I mentioned, I do more of 80%, 90% swing trading, lesser on short-term trading. So I do some scalping, but it's on a lesser sense. So most of my positions, the feedback period, so feedback means hit the target or stop loss, is around 1 to 2 months. 1 to 2 months.
Okay.
Yeah.
Okay.
So it's mainly, and whether I go more longs or more short will depend on the market flow. We call it the market flow. So if the market is in a bullish flow like it is now, I'll be taking more on the long trades than the short trades. It's like the ocean rise, sampan rise, ocean sink, sampan sink. So you want to swim with the ocean.
I see. And just now you mentioned that you actually expanded from futures, forex into stocks as well, right? So from an asset class point of view, is stocks the main part of your portfolio right now, or is it still a very balance between forex, futures, as well as stocks?
Okay, stocks is mainly for swing trading. So I swing trade US market, sometimes Singapore market, Hong Kong market, even Malaysian market. I do some swing trades as well on the higher time frame. So for forex and futures, to me, they are products more suitable for short-term trading. So I do scalping for forex and futures, but on the higher time frame swing trading, I hardly trade on forex and futures. Mainly for short-term trading.
I see. And I understand that you actually do crypto as well, right? So what kind of time frame do you use for crypto?
Okay, cryptocurrency, I do just on the high time frame. Just on the high time frame. Okay. Yes. So yes, you're right. I also have another separate portfolio where I concentrate mainly on trading cryptocurrency, right? I would say I trade and invest at the same time. So because if I find a token is good, I enter based on my strategy, my technical strategy.
Okay. So is your stocks and your crypto generally the same kind of strategy? Because the way you explain it, it seems like they are using similar strategies, whether you are managing stocks or cryptos. Right.
In terms of entry, right, I use mainly the strategy that I use for both stocks and cryptocurrency. But sometimes for cryptocurrency, there are this fundamental aspect of it, which I rely more on, unlike for stocks. So for crypto, because the volatility is very high, so I do adapt my risk management approach to cryptocurrency and also take profit target for cryptocurrency as well.
I see. Okay, I'm very sure many of the summit participants will be very interested to hear a little bit more about how you actually trade the cryptos. But I just want to backtrack a little bit towards the bulk of your portfolio, which is a swing trading on stocks itself. So you mentioned that you trade US stocks, Hong Kong stocks. Can you share a little bit more about just some generic principles of how you actually apply your swing trading on stocks itself? What are some of those things that you look out for before you tell you that, hey, this stock is worth considering for this swing trade? And how do you actually determine when to get into a swing trade, and how do you manage the trade from there? Just some generic ideas and principles behind.
Okay, so my preference is again those fundamentally sound stocks. So when I look at a trade from technical basis, right, price action basis, for a long trade, I'm looking mainly for bear trap. So bear trap, as you know, the bear trap means that let's say there's a support level, price trade back down, right, and then trade back up. So it's like traders who trade the breakdown would have been trapped, and then because the price turned back up. So these are signs where, from a manipulation point of view, right, when big traders are being trapped, is when the big boys are actually accumulating their position, because my methodology is very focused on understanding the positioning of the big boys and to trade alongside with them. So very importantly, look at bear trap, and after I enter the trade, right, I will manage the trade in a way that I will achieve at least 1:2. Yeah.
I see. So okay, I'm not sure whether this is a trade secret or not, but when you mention bear trade, a bear trap, you're talking about you actually observing the big boys. Are they part of the group selling off the stock, or are they the one actually buying up after the sell off, right? So is there any realistic way to be able to actually see or to get an edge in terms of knowing whether the big boys are the ones selling off or whether the big boys are the one accumulating after the sell off?
Right. Okay, so from a very higher level, right, is that all stocks has a market maker interest. Okay, so the market maker is obliged to provide more than 90% of the liquidity for the particular stock or instrument. All asset class has a market maker. So the market maker basically is the one who's moving the stock. So he can trade the stock down, up and down as and when he wants, because he control more than 90% of the liquidity on the bids and the asks. So if he find that, right, at a certain key levels in the market, let's say he sense that in his order book, like what we mentioned just now, right, the brokers sell our information to the big boys, the market makers. So they roughly know at a certain level, right, where are the stop loss congregated by retailers. Okay, no doubt there will be stop loss all over the chart, but they will only hunt those levels where majority of the fishes are, and they will create a kind of bear trap, to take all these stop loss and then to bluff people that there's panic selling, cause people to sell, especially during negative news event. That means they coincide their sell down with a negative news so that the manipulation is more real and things like that. So I look out for signs like this, right, to give me confidence that, I know that he's trying to play tricks and to shake people out, and it gives me confidence to enter alongside with all the market makers.
I see. But for stocks, it's not going to be so straightforward, right? Because the way that most people buy and sell stocks are still through the exchange. Unless there's a way to get information that is not publicly available, then otherwise it's going to have very difficult to have this edge of knowing where the most of the orders are at, right? So how do you actually overcome this?
Okay, so our orders are routed to the brokers. So brokers are not market makers. So our orders route to the broker route to the exchange. So I believe there are some relationship between the exchange, right, and the market makers where information is available to them, right? And so with such information, they are able to understand where is the interest. That means, is it profitable for them to chase that level? Or profitable for them to move up or down first? So sometimes they want to go up, but they may want to squeeze the chart down first, for example. So from a retail point of view, right, we will not know 100% because it's like a black box. You'll never know what is the interest of the market maker. But what we can do is that we can visually see from the chart where all these bull and bear trap occurs, whether at a certain point of time is there a lot of retail demand or supply going in, right? And this will give us a good judgment on, like I said, like high probability judgment at certain levels. Is there stop loss being taken out, right? Is the market maker squeezing? Is there bear trap? What will most traders do? So it gives us edge, right? Even from a retail perspective, looking at the charts.
I see. But like what you mentioned, like in the US, there's 6,000, 7,000 stocks out there. How do you realistically, as just an individual, be able to actually detect or even like scan for bear traps happening in any of those stocks that is available out there?
So you're right that it doesn't happen. So let's say 1 year, right? 1 year time frame, right? Probably one year, there's probably 3 to 4 tradable patterns. So of course, you cannot stay at the same stock because it may come maybe a few months later on, then there will be a setup and so on. So I develop scripts. So I have scripts where I scan for possible setups, and I can tell you every other day have opportunity on. The script is quite well done by my team, right? My team of traders, they help me to code this script. Yeah, so you can find one.
So which means that from a workflow perspective, you will just like run your scanner and see, okay, for today, or let's say for the next 1 week, what are some of those stocks generated by your scanner that tells you that they are potentially in a bear trap, and then you take a look at the chart and see if that's indeed the case or not, and then you start to plan your trade for that. Is that generally your workflow, how your workflow is like?
That's correct. So that's one approach. The second approach is, of course, I would say news. Like you may hear negative news in CNBC, right? Even though we don't trade news, but news is for awareness, right? Entertainment purposes, awareness. So if you see that, hey, how come this stock, a particular stock in the news like Alibaba, sell down? Okay, so even though it's not in the scanner, but you know that, okay, Alibaba is a good stock, so you will monitor it and wait for manipulation event to occur to enter. So I would say that it's not 100% through scanning, it's also through your awareness of the market as a whole. Yeah,
I see. So in a way, if I can just summarize what you mean about this bear trap strategy is that, firstly, you consider only stocks that are fundamentally good. You know that in the long run, it will continue to go back up again. So you just wait for occasions where the market suddenly just sell down very significantly and trying to find that capitulation stage to actually get in and get into that swing. Is that generally the main strategy, how the main strategy works?
Okay, so I also trade speculative trades. But I would say like what I told you mainly would be the fundamentally strong one, because this gives me an added edge that they are like a rubber ball, like what Adam mentioned, a rubber ball fundamental company, they always recover in the long term because stock market is always rising, right? So yeah, I would say that yes, majority portfolio is into fundamentally strong companies. So I look for all these things to trade as well.
I see. So were there any situations where your swing trades, after it starts to go into paper profit, you decided to hold it for the longer term because the general trend is still up, and you instead of just touching your profit target, you get out, you just continue to hold it for the longer term, or you might even add on more position? Were there any situations of that examples?
Okay, there are some stocks that I hold a bit longer, especially those that I bought in March last year. Okay, I actually rolled it for about 6 to 8 months before I sold off after I see that something is peaking, right? But I never hold anything more than, from a trading perspective wise, I never hold anything more than 1 year, except maybe when I trade cryptocurrency, I do hold like Bitcoin, Ethereum, because fundamentally I believe in it, and there were many technical setup when there's that capitulation, right? Okay, so this helps me to prioritize certain trades. Like if they are fundamentally strong, I will tend to ride them longer.
Okay. And so let's move on a little bit to your cryptocurrency that you are trading. So generally, you mentioned that your strategy is more or less the same, but there are some differentiating factors. You tend to hold cryptocurrencies for longer. Can you share a little bit of your thoughts of why you think, from a fundamental angle, cryptocurrency is something that is worthwhile for you to hold on to from a longer term perspective?
Okay, cryptocurrency is a very controversial asset class, right? So it's really you like it or you don't, you love it or you don't, right? So there's a love-hate relationship between traditional investors and I would say crypto believers, right? I would say that I'm not the kind that like a very religion kind, but I take it from a very like a profit-oriented position, okay? Because it's a new asset class, right? When money flows in, right, the asset class will generally rise. So there's such a lot of opportunity going on, just like the earlier days of the internet bubble. So even though it's a bubble, but there were fortunes to be made, right? The key thing I would say that even if we trade as a trader and as speculators, the key thing is not too much about whether the asset class will eventually succeed. Because I also don't know, nobody knows for sure that like Bitcoin, Ethereum, or certain asset class will rule the world or become the reserve asset. Yes, this is the what some hardcore believer believe. But I would say that along the way, the key thing is to money manage. That means if you make some money, take some profits off the table, if it gets too extended, there are signs of top. Right, signs of top means maybe you see like a flush up, a double top situation, and things like that. Technically, even though you believe in it, it's better to take some profits off the table.
Okay. So let's talk a little bit about your profit-taking strategy. So we know roughly how you actually get into a trade already. So in terms of profit-taking strategy, do you typically use things like profit target, or do you use things like trailing stop, or any other kind of profit-taking strategies that you use?
Okay, majority of my positions, right, I do put a OCO order, one cancel or the other order for at least 1:2 risk reward. For at least 1 to 2 risk reward. So if the price hit the target, hit the target stop loss cancel, hit the stop loss target cancel. However, for some of the great.
So which means once it touch the 1:2 reward to risk ratio, you will just let the system take you out of the trade.
Yes. Usually for speculative trades, because speculative trades I don't have any fundamental so-called conviction. But for stocks that I buy that I trade that are fundamentally strong, I usually just put a stop loss first. But I have
so you don't have a profit target, you just have a stop loss
first.
And then you watch how it behave after that.
All right. Then I will decide, okay, let me, if it must see how it move. If it accelerate too fast towards a resistance level, for example, then yes, I will take earlier.
So when it goes parabolic towards a key resistance.
All right. So usually like this, go up like this, will constipate one. So that is my technical consideration.
Okay. But after you get in, if you just gradually climb, you will just hold on to it in a way, right? Just let time take its course.
Yep. So there's understanding price action is that if it steadily move, right, it's actually healthy. A lot of people want it to move fast. That's why I always say that, if it moves slowly, it's good. Like Bitcoin, Ethereum. The reason why it crashed recently is it moved up too fast and there were signs of bear trap. That's why there was a crash. If it has moved, if Bitcoin Ethereum has moved up slowly, gradually, right, it will be a very healthy uptrend. So now the chart is going to constipate for a while first.
Yeah, it's really like hundreds of % in months. That is really like, it's unsustainable, but it actually held on long enough, right? So actually, if you actually watch it, there was actually signs of it turning down and breaking supports, keep on breaking supports. And that is actually some time that really tell you that something is not right and probably you should start liquidating in a way, right? So if you're trailing stock by right, it should actually protect you, the bulk of the profits that you have already made.
So personally, I don't use trading stop loss because when I was I remember I had many bad experiences when I was a new trader. I try to, every time the price move right a bit, then I protect profit. Then what happened to me a lot of times is then the stock the position came down to take me out, then they go and hit target. It was like I being penny wise, pound foolish. Then a lot of times, like the risk reward cannot be justified because you sometimes you get maybe 1 R, right? Maybe sometimes you cut loss too early because you throw stop. So it messed up your risk reward cycle in a sense. And I would say that.
So does that mean that you are always taking profit at high points if possible? Is there only occasions where you see that it's trending up, and after that you see the trend breaking down, then you get out? Is there any such situations?
Yes, there was times when, let's say, if I decide, okay, I'm going to hold it longer, more than 1:2 or 3, or then of course, trading is not 100%. Sometimes it go suddenly 1:2, then suddenly come back down, and that's when I'll decide whether okay, actually yes, we want reach 1:2. Then now it turns back down. Do I want to just take profit? My rule is that as long as the trade has achieved at least 1:1.5, I can close it prematurely. At my discretion, so that I know that all my trades at least will achieve 1:1.5. So even if I hit a win rate of 40, 50, 60%, based on probability, I will still be profitable.
Okay. Now let's talk a little bit about your risk management. You mentioned earlier on that risk management is something very strict, very stringent. You don't usually change that. You just follow the strict risk management strategy that you have. Can you share with us, enlighten us a little bit about how do you go about your risk management in terms of individual trades as well as from a portfolio angle?
Okay, I'll say that I look at it from percentage of my portfolio. So I don't risk more than 4 or 5% per trade. If I'm very confident about a particular position, I may go in up to 5%.
Okay, so wait, hold on. Let me just clarify on that. When you talk about 5%, you are talking about 5% of your entire equity will not be put into a single trade, right? Not more than 5%.
5% risk. That means if I got a 10K account, I'll be risking $500.
$500. So when you're talking about risking $500, does that mean that if you hit your stop loss and you exit, you lost $500?
Yes, I can go up to $500. Okay. But only when I'm very, very confident.
Yeah, but actually 5% is actually quite significant, right? Usually the best practices usually suggest about 1 to 2% max.
Yeah. So The one that I adhere to is still 1 to 2%. Like just that's why I say up to 5%. So this up to 5% is really when I'm very confident, right? Wow, the market's this particular thing sell down too much, and I'm very confident it's going to turn soon. That's when I may increase my size on a very
Okay.
yeah. So that was my like eureka moment when I can do that, but not more than 5%.
Even with 5%, you don't actually go in one shot with 5%, right? Is it in stages typically?
Okay, it will depends also. Like if I'm very certain that this is sell down is too ridiculous, I may just go in 5 straight away to risk 5%. But if not, I will just put maybe 2 or 3% first. Then if I think that it's holding well and then it start to show signs that it's going up, then I'll just permit in the rest.
Okay. Interesting. Now, typically, is your equity fully deployed most of the time? And actually, do you go about using leverage as well in your trading?
I would say it's around I wouldn't go more than 150% of my equity. So so from a portfolio management point of view, right? Okay, I don't open more than 5 trades at any one time. Okay, so when I'm very confident, I go up to 3 or 4 or 5 trades at any one time. If sometimes when I'm not very confident, I may go maybe 1 or 2, and especially if I got drawdowns. Like if I have a string 4 or 5, 6 in a row, then my next trade I'll do one. I'll do one more. I do one more to gain confidence. So it's not like every time I must always have 5 positions, for example. So but even if I got 5, right, based on experience, my equity usually will not exceed 150%. Right? So it's a margin account, but you will not exceed.
Okay, which means that by the time you deploy the 4th to the 5th position, you probably will be using leverage already, right? Because it goes already beyond the amount of equity that you have. So which means that typically, when you actually open, let's say 1 position, 2 position, 3 position, it is a possibility that almost 100% of equity is already deployed just with these 3 positions, right? Which means that on average, each positions own about 30% of your portfolio. Is that
okay?
Yeah.
Okay, because sometimes it still depends on the entry and the stop loss price. So it depends on the stock also. So if your entry stop loss too tight, right, then of course the value of the position is So it depends also, because we don't have when I trade, I don't really have. I need to look at the stock to determine.
So you don't really consider after I go in this order how big this position is going to be my entire equity, right?
Yeah. I just base it based on okay, the technical signal is that entry is here, stop loss is here, and sometimes some stocks, right, could be just 30, 40,000 value. Some could be 100,000 value. If the entry and stop loss is too tight for a very high price stock, for example. So because I'm just focused on the chart, so margin wise, as long as I'm comfortable, is within my limits, I'm okay.
I see. All right. So thanks for sharing so much about your own individual trading methodology strategy. Obviously, we can't go into the details of every single steps that you take, but I think this provides us a very good overall idea about the process, the things that you do. So let me just go onto this part about the things that you do as a trading mentor. I think that was going to be something that's going to be interesting to many of the summit participants as well. So what were the key motivation for you wanting to become a trading coach, a trading mentor when you left the prop firm? And were those motivation realized? Was it what you expected? And even to this point in time, do you enjoy being a trading mentor?
Okay, when I actually approached Adam, it was something that I find that I could do together with him, and it's actually one of my so-called dream to be working with Adam, because he has been a mentor. When I was a teenager, came to my school, give a talk, very charismatic, and I find that like sometimes when you approach a mentor, it's better to come up with something that there's a synergy. And during the time, I find that the only thing I can bring to the table is to be a mentor, the trading coach with him in his company. Actually, I thought that I'm going to have a small class, optional class, maybe just one-off event, just like that. I didn't know it will turn out to be a long-running course because of the popularity. Yeah, so I thought it was just going to be one-off event, but at least I have something, the synergy with Adam. But since then, Adam was very encouraging. In fact, when I started the first class, it was well received, And Adam actually told me that, hey, why not you come on board to be a principal trainer and run this on a regular basis to teach his student and to have new students. And in fact, I was very honored that my first class that I conduct, Adam sat there for the full 3 days course. The full course, he sat there and I was told by the staff, he's one of the staff later on, that Adam never attended any other class. He's one of yours. He sit there the whole day, and he purposely blocked his schedule. He blocked his schedule, right? He's very busy. He fly many times a week. He blocked his schedule just to attend your class.
Wow!
So I was really, really, really honored and very honored.
Wasn't it stressful?
Yes, seems behind or very, very stressful. So it's very good. I guess it's not. I learned a lot from Adam throughout the years. He's more than just a business partner, but a good friend, and I seem like a big brother also. Whenever I got any, need some enlightenment, right, I always share with him.
I see. So there's always this question that a lot of people ask, is that if let's say you're a profitable trader, why would you want to teach, and why do you want to sell courses? So from your own personal angle, from your own personal perspective, you're a profitable proprietary trader, you became an independent trader, and why do you want to teach if you are able to be profitable? What do you have anything to share about your thoughts behind this?
Okay, so yes, trading on my own is profitable, right? Of course, when I run the class with Adam's company is education company. So when I run the course, actually I did not determine the cost pricing, all this. It was very clear cut that, okay, I'll train under you, then of course it has to be a profitable business to run, because we have to have the marketing, the operations, the room, and so on. And the key driving point is really to have the opportunity to work with Adam, right, during the time, and also to do this as like a tuition teacher, right? And also because I'm very passionate about trading. In fact, I enjoy all my classes even until today, right? When I share when people about market manipulation, it's really something that I really like. Yeah, so I continue to do it until today. But I always tell my students is this: when you come for my class or Adam's class, right? Okay, I will say that it's not like when you come for my class means I win, you lose. You pay me money, I take your money, you lose. It must be a way. You come for my class, I will make sure that you learn something useful. There's a value in it. If not, there's the cost will not be sustainable, right? If it's just money, right? No doubt, yes, it's money. Yes, to pay for my time, to pay for the marketing, to pay for the operations, people working in the company, right? But it's a two-way thing as well. Students, we have to make sure that students also benefit.
Yeah, of course. And obviously, I mean, if you're so passionate about trading and if you like training so much, then this is just a natural extension for you, right? So what's the harm of being able to help people at the same time while generating potentially extra capital for you to actually trade your own account at the same time, right? So that you can grow your returns faster in an absolute manner. Right.
So there's a rule that I set for myself. I cannot not trade and just teach. I must still trade, and if I teach and I don't trade, I cannot live with it. I have to. That's why I still very active. Trading my own accounts, cryptos, stocks, everything. I still actively trade, right? So that I'm up to date and I have the skills to continue to teach my students.
I see. So in a way, has training or teaching help you in your own trading in any ways as well?
Yes, in fact, it helped tremendously as well. I learned a lot from, there are people who come in as who they were very low profile, but I came to know that some of them were even more senior traders. In fact, a lot of people thought that only newbies or struggling traders join courses. I can tell you, they are also a very profitable trader, because traders, they have always had this mindset that, hey, I want to learn the new things. Yes, I'm profitable, but I want to know what other people are doing, even though I may not be using, but I want to know if I can learn one or two tricks. So there are a lot of people along the way that I met is like that one. They were very successful, and then they will share with me their tricks as well. And the program evolved over the years, right? I actually tweaked. I find that, hey, this guy says is correct. The bar, I must look at it this way. Also, I tweak the way, or the methodology, and refine it over the years. Yeah,
I see.
I
So
learn
it's
from all of them.
about creating an environment where new traders, experienced trader, or experienced traders come and learn together, do some value exchange, and that's how it actually helps the entire community or whoever is participating in the course itself to become better, right?
Right, because everyone come in with the like-minded mindset to make money. Nobody come in to lose money, right? Everyone come in to learn to make money. So our enemy is not one another, right? Our enemy is the market maker. So we aim to decipher and make money from the market. The market is
Yes.
very big, so there's room for everybody.
Okay, so you, based on what you said, you have actually taught about 1,800 students to date. So can you just share a little bit about, based on your experiences mentoring and teaching these 1,800 students, what were the typical, were you able to identify any typical problems and issues that new traders generally have?
I guess one common thing that I encountered is that a lot of traders they get a bit impatient. That means actually a lot of the questions that they may have they have, right, it will be have answered, right, later on one. But a lot of times they probably learn the first strategy, but they don't want to cover the risk management. They thought that, wow, the strategy very important. I know already the risk management, the psychology I know already. Then they just go straight, and then they realize that, hey, there's something that I do wrongly, right? That I lose some money. Then but I don't know why. Then I would just tell them, hey, because you never follow my rules, the risk reward, the risk management, certain criteria where I don't need to take up to 3 to 5 trades, and market flow, all these kind of thing consideration. So I would say that new traders should be patient to learn step by step. No doubt there's strategies for uptrend, downtrend consolidation. Choose just one first. Always make it like, if you find the pizza is very big, right, you're not going to eat the whole thing, right? You chop it to small pieces to eat one by one first, right? So that you can digest it, right? So if not, I think that trading is not rocket science. If you have the passion, you have the interest, you can, some fast learner, some slow learner, right? But eventually, if you have passion, it will drive you forward.
Because even with the best course, not everyone is going to be successful. Everyone could be taking the same course. Some will become better than the trainer itself. Some will never ever make it. So do you see any commonalities between those people who spend the money, a lot of money to take the course, but still don't make it, versus those who are able to make it? So other than, of course, you say some of them actually try to shortcut their learning. They think that I'll just look at this, I just apply that. Any other things that you have noticed that could potentially help someone who's eager to learn, willing to spend the money to go for courses to really become successful? Is there some best practices or some kind of things that you think they should be looking out for?
Okay, the most important thing I would say that whichever methodology you use, right, in trading is all about charting. And charting means screen time. So what a lot of traders lack is that, yes, they may understand the whole course, but in terms of screen time, they always lacking, because they, like I said, there's a question just now where you asked how long does the trader need to take? I told you that, the trader, to be absolutely ready, proficient, is when he going through uptrend, crisis, consolidation period. So trader, after they learn the technique, they have to, the best way to learn, I would say, is to have a small account and start to risk and start to trade, because that's when you actually train your psychology as well, and not just in terms of strategy, risk management. You train your psychology, how you handle losses psychologically, how do you handle wins as well. So I think that would be the best advice, to start with something that you can afford to lose, even if you lose maybe 20 times in a row. A small account, but it gives you the feeling when you trade.
So from your opinion, is it also more ideal that you trade with a small account rather than just doing paper trading? Do you think psychologically wise, there's an impact between trading real money versus paper trading?
Okay, I would say that it's not 100%. It's not say you must really die do live trading. I understand that some very new trader, like for me, when I started, I still remember when I first started risking $100-200 per trade. My heart is pumping. I imagine it. I chicken rice during that time was $250. I imagine, I lost 100 plates of chicken rice or something like that. So at the start is a bit difficult, right? So the thing is that, okay, last time I have no choice because the company said minimum $200, $300. But from individual basis, right, the lowest I think you can go is $50 per trade. Right, $50. If not, I can cover formation already.
Yes.
Then if $50 also cannot, right, you still feel very
uneasy,
right? Cannot sleep, I keep checking your phone, right? Then you have to do paper trading first to get the feel and to simulate yourself. But if not, I think most people, you just have to, it's like going to a swimming pool, right? You just have to put your leg in first, feel the water, then put the second leg in, then jump inside. One time you struggle, then after that you in sync with the temperature.
Yeah. Because ultimately, if you don't trade with real money, you will never be able to understand that anxiety. And if you don't do that, you will never have a chance to get over the anxiety if you just forever paper trade, right?
Yes, correct. So the key elements in trading is also psychology, right? A lot of traders, I find that reason why traders lose money in the long run is that they did not make enough in the good times. They lost. Bad times, yes, we'll have bad times, but the reason why traders lose money in the long run is they never make enough money during good time. Because good times, sometimes they hesitant to enter.
Yeah, especially when the good time comes after a bad time. Then they'll be very afraid to get in.
Yes. It's like last year, market recover, good time, right? Oh, but they're still very scared to enter. But yeah, there's no, it's like something like that. Yeah.
Then now that it has run a lot, then everyone feel optimistic already. Then you want to enter. Maybe the next crash will come again.
Hopefully not.
Okay, very interesting. So I understand that you are conducting quite a number of free webinars. I mean, no more seminars nowadays because of the pandemic. So I think that you mentioned that you'll be conducting a webinar very soon in July or August period, right? Can you share a little bit more about this free webinar that you are conducting and what can participants expect to get out of these free webinars that you'll be conducting?
Okay, you can see the link below, right? There's a link below. You can click on the link below to register your interest to participate in this online live webinar. Okay, so in this webinar, I'll be sharing more about who are the market makers, how do they manipulate the markets, things like demand, supply, manipulation, right? And more examples, trading examples of how I actually trade the markets using the strategy that I use, right? And also to share with you guys more of the curriculum of the course that I conduct. So there's a link below. You can just go ahead to register your interest.
I see. So is this suitable for any kind of traders? If let's say I am a stock trader, I'm trading like in stocks in India or Australia, or if I'm trading like crypto or forex, is this webinar going to be applicable for me?
Yes. So the methodology that I use, like price action manipulation, right, applies to multi-assets. So it can be applied to stocks, cryptocurrency, forex, and futures, right? Even for stock, different countries, you can use it as well. Okay.
I see. Fantastic. Now, Alson, before we end off this interview, I would just like you to be able to just concisely, let's say, give us a 3 important pointers for someone who is new to trading. What do you think is these 3 important pointers that's going to help them lay a strong foundation to slowly emerge from a newbie trader to become a proficient trader? What would be the 3 main things that you want a new trader to focus on and to look out for in order to be able to achieve that?
Okay, in terms of trading principles, right? My first rule is perseverance, because you will no doubt go through the good times and the bad times, and it's how you handle the bad times that will determine you as whether you're a good trader. So perseverance and discipline, right? Discipline to manage your positions, right? In terms of even drawdowns, and also I would say have a open mind, right? Have an open mind to consider things that you learn. I mean, constantly learning will be good. Yeah.
I see. Fantastic. Hey, Alson, this was really a very insightful interview. And I'm sure the summit participants now have a better understanding of the way that you trade and how you can potentially help them if they were to actually go out and learn more from you. Thanks again so much for your participation in this summit.
Thanks really for inviting me to this summit, right? And it's a very good conversation with you. Right. Hope to see you guys soon. Right. Hope you guys enjoy the rest of the summit.
Fantastic. So now, for those of you watching this summit video, if you would like to keep in touch with Alson and register for his upcoming free trading webinar, live trading webinar, remember to click on the web link provided below this summit video to learn more. And finally, if you would like to continue to review this particular summit video beyond the summit, you can also check out our TraderWave TV service, which is in short what I like to call the Netflix for trading education. Now, with that, we have come to the end of this interview. I'm your summit host, Philip Chew, and I hope you will continue to learn and apply the teachings from the many wonderful speakers on board this virtual summit. Take care, and we talk soon.